All right. Welcome everyone. Welcome to this week's episode of Market Wrap. I have with me Mr. Pankaj Pandey, and finally a good week for the markets. I think we didn't have one red line this week. Sir, how's the outlook forming? Are the bulls back? Are the good times back?
Hi, good evening, Vishu. Yes, so this was one of the best weeks which we have seen or in last 4 years in terms of weekly gains. And markets or Nifty is up about 4.3 odd percent. Mid cap, small caps, I think closer to 7, 8 odd percent. A lot of sectors like say defense, real estate, PSUs have done well. Most of them gaining more than 6%. Now, what has happened is that largely we are seeing some weakness in the US market, and that is sort of shaking the confidence of FIs there, and which is why now it looks like that the intensity of FI selling has sort of come down. And that has sort of led to the overall positiveness for the markets. And we have been falling in a certain trend line. That trend line also is broken. So we have seen nearly 1,000 point kind of a rally. Now, going forward, obviously some volatility can come in, especially from US markets. This April 2nd date is also sort of approaching near. So market is not going to sort of move in a single straight direction. It is very much possible that you might see bouts of volatility or correction in between. But I think in case if we see a correction or a pullback and we make a higher bottom, then we would want to sort of conclude that the bottom has been made. There are a couple of other observations, like when you look at the number of stocks. So now the number of stocks or percentage of stocks above 50-day simple moving average. I mean, that was about 7 odd percent at the beginning of this month. Now that number has gone up to about 49%. You have further supportive macros in terms of dollar index being soft, crude oil prices being weak. Then rupee, after a long period of time, at least this is one of the best performing currency in this particular week. So all in all, things are sort of turning positive. I hope the US market does not turn very negative because then that is what we have been fearing for some time. So till the time US market is mildly negative, I think it is good for us. Let's hope that Trump does not cause that kind of a volatility where it becomes negative for everyone. So from that perspective, yes, it's a welcome relief for the market. And if we make a higher bottom, our sense is that bottom has been made, and then next 1 or 2 months, things can be a lot more better going forward for the markets in general.
Absolutely. So you touched upon FIs turning slightly softer on selling. Could you elaborate what has been happening in March regarding FIs?
So, Vishu, if you look at the first 15 days, they continue to sort of sell. So they've sold about 30,000 odd crores. And typically, even since October, if you look at, they've sold about 3.2 lakh crores. Largely, the bulk of the selling has been in oil and gas, which is, my sense, is a Reliance plus BFSI. Now, what we have seen is that in the first 15 months, there has been some sector rotation. So IT is clearly facing a good amount of brunt of FI selling, whereas banking has done very well. So banking, if you look at banking as an index, has recouped 5 weeks of decline in a single week. So you have seen, or we have seen, banking doing exceptionally well. So there is a change in sectoral bias, and largely because of a better prospect of rate cut. Plus, IT is facing its own set of challenges. So there is a change in the texture of FI selling. So from that perspective, things are on a slightly better side. The intensity of the FI selling has also sort of come down. Now, post first 15 days, the overall FI numbers have been positive. In fact, has been positive on some days as well. The other thing is that we are expecting some bit of a flows to come in from FTSE rebalancing as well. So while there is selling in some of the segments like say technology, FMCG, which have seen the maximum selling, but I think BFSI definitely things are turning positive, and it's a big segment. It is one of the few segments which can lift Nifty higher. So that way, I think FI selling, though it was there in first 15 days, but after that, things have been on the mend.
Absolutely. We also saw some announcements from US Fed coming. So what are the key takeaways?
So US Fed unexpected lines didn't do much to the rate cut, but they've at least signaled that there is a possibility of 50 bips rate cut by the end of this year. Now again, they are highlighting that there could be elevated inflation and there could be higher uncertainty regarding the economic outlook, but they don't seem to be in a hurry to sort of cut rates. While they have lowered the growth forecast and parallelly increased the inflation forecast, uh, so that way they are also in a wait and watch mode, because what they're saying is that if the inflation comes, it is going to be transitory. So some people are sort of making fun of that also, that they spoke something similar when the COVID happened and the inflation went up from 2% to 9%. Anyway, just we have to see how things pan out. But I think one of the interesting things what we've seen is that the pace of balance sheet reduction by Fed has definitely come down. So from $25 billion kind of a monthly run rate, what they're saying is that they'll allow only $5 billion of treasury securities to sort of mature every month, which my sense is positive for emerging markets overall.
Right. We also saw some good number of announcements being made in the defense sector. I think there were some new guidelines as well, and then a few proposals were also cleared. Any outlook on this sector, sir?
Oh yes, so defense stocks have been flying this week. Most of the defense stocks have done very well. I think there are a couple of things to sort of highlight here. One, the beginning of the year, the defense minister has said that this year is going to be the year of reforms. And just to put a context, last 2.5, 3 years, the acceptance of necessity has been given to projects worth nearly 8 lakh crores. But most of them have not really converted to orders. And which is what the ministry has now come up with certain guidelines to make this process more efficient. So what they're clearly saying is that the average acquisition timeline, which used to be 2 years from acceptance of necessity to ordering, that needs to be brought down to about 6 months. So from 2 years to 6 months. How they're going to do this is they're saying that when you are seeking acceptance of necessity approval, the RFP or request for proposal has to be made then only. Then there is only 6 months will be given only for the contract negotiation. Earlier, the time taken was quite large. Similarly, field trials also is one of the other steps which used to sort of consume a lot of time. So they are saying that they are going to revamp the field evaluation trials as well. So all in all, it is very good for the defense ecosystem, because while there is a need and the need has been accepted, the process to sort of execute has been pretty long. So if we are working on that, then things are structurally very positive for companies like all the PSUs like HAL, Bharat Electronics, BDL. Now, to top it up, what the government has also done is that they've announced acceptance of necessity proposals for worth about 54,000 odd crores. So that includes torpedoes, which is called Varunastra, then new 1350 HP engines, 1490 tanks, and then you have airborne early warning systems. So all in all, these things are positive for companies like, say, for example, torpedoes is definitely positive for a company like BDL, or when you are sort of making airborne early warning systems, so then it is positive for Astra Microwave, Data Patterns, and Bharat Electronics. So that way, I think this is one sector which is now sort of getting a lot of attention. I know a lot of things get highlighted that the Europe also has passed a budget and vice versa. So as of now, the linkage between Europe spending and ours is not there. But in future, it is very much possible that India can be a arms supplier. So from that perspective, we can keep our fingers crossed. But at this point in time, I think it is the operational changes which is driving the stocks higher. So HL is what is we prefer. BL, Cochin Shipyard, Astra Microwave, Data Patterns, and solar industries is what we would prefer in the defense space.
Absolutely. We saw Accenture coming out with its Q2 results. What are the takeaways from it?
Oh yes, so it's a fairly large company in the IT sector, which has got a decent blend of both consulting plus managed services. Now the numbers were overall okay. The revenues were up 5% in terms of dollar terms. Margins slipped a bit, about 20 odd bips. Even the new bookings are okay, 3% kind of a decline. What they've also done is that they've marginally raised the guidance, say from 4 to 7% to 5 to 7 odd percent. So upper limit they have not increased because they are still sort of not very clear on the macro side. Margin also very narrow guidance given. Now, for Indian IT, the only key takeaway is that, see, one of the big fears have been that if US is going to drive so much of a cost initiative, a cost reduction initiative, what is the kind of implication one can have? I think Accenture displayed that. So, for example, for Accenture, the federal spending is about 8% of their revenues. Now, that is where the company highlighted that they're facing risk of getting negatively impacted there because of the Trump administration cost-cutting measures. So, which is why we have seen the stock reacting. But for Indian IT, this number is even lower at 3 to 5 odd %. And it's not with the federal, but it is with a lot of other states. So, from that perspective, the relative impact on Indian IT companies is going to be lesser. But yes, it is definitely a minor risk for Indian IT companies, because if the government is in a cost efficiency drive, not only impacts their budget, but it also impacts the entire ecosystem. Uh, so, so I'm not surprised when you see, or one should not be surprised with all this. The IT stocks are at 52-week low. So I don't think things are yet changing for IT stocks in general, unless we get a surety that US is not going to sort of witness a slower growth or a recession. What we prefer here is again companies which are delivering 20% plus kind of a growth, so which is something like Persistent and Coforge. I think most of the other companies may not do much from a price performance perspective.
Right. So I think cement sector is also seeing some price upticks. What are our readings from this sector?
So cement has seen a good price increase in the last 4 months. So typically the price increase issue has been about 20 to 25 rupees per bag, which is for most of the regions. The only challenge or hitch has been the southern region, where there has been an increase of only 3 to 5 rupees. And so there the prices have not really sustained, and we have seen a rollback in prices. And largely because of the fact that there has been an oversupply, and then there is a volume push being done by the larger players. The other thing is that the in some terms in cement companies, the cost structure, especially related to petcoke, has sort of gone up. So petcoke prices in the last 3 4 months have gone up by 20 to 25%, and this could have an impact of 70 to 80 rupees on a per ton basis. And typically, cement companies make 700 to 800, or some make 1,000 rupees EBITDA per ton. So obviously it will have some impact, but most of the companies are expected to sort of pass it on. Our sense is that outlook overall remains strong, but yes, there's some pockets where the outlook is not so brighter. So which is why one needs to be selective. So for example, companies in the southern side probably might struggle for some period of time. We have already seen Ramco not doing so well, Sagar Cement not doing so well. But pan-India players like Ultratech Cement or Ambuja look attractive to us. Besides that, JK Cement or JK Lakshmi, I think these are the other two companies which are relatively insulated from the kind of softness what you see in a market like South.
Right. I think metal is another sector in which we have seen some green ticks, and there were a lot of news around it as well. Could you help us understand this better?
So steel sector is in a perfect storm of tariffs. So what we have seen earlier is that US has imposed 25% tariff on aluminum and steel products. Now, after that, what we have seen is that the Indian government also has proposed the imposition of 12% safeguard duty. That is will be levied for 200 days. Now, what you also get to hear is that EU is looking to sort of restrict steel imports by 15 odd %. And yes, it will have some impact on India, because typically what will happen is that for Europe, overall our exports constitute about 38 odd %. So from that perspective, we will, or the Indian steel companies will get impacted. So with that in perspective, it was extremely important that we put some kind of a safeguard duty, and which is what the government has done. So from that perspective, incremental improvement of 2,000 to 3,000 rupees per ton is there. But yes, steel is going to continue to witness a number of ifs and buts, depending on which region, how they sort of play out. So I think it is one of the few sectors where you are seeing policy action across multiple geographies. What we like is, again, a company like JSW Steel or Jindal Steel and Power. Metal has been one of the best performing sector, and our sense is that with the prices already at 4-year low, any further improvement is going to drive the prices higher.
Right. Sir, every other day we also see in the news that Tesla is coming to India and something or the other step is taken. What are our readings into it? What should be on our watch list regarding this event?
So a lot of it is there in news, but not confirmed. So one thing is sure that they plan to sort of enter India. They've already signed a 5-year lease for a showroom in BKC and one in Delhi. Now there are reports that probably they may not be really importing it from the Germany the way it was earlier envisaged. And it is sort of again unconfirmed that they might tie up with Tata Motors, though it looks logical because Tata Motors has commissioned a plant with a capacity of 4 lakh units on a yearly basis, whereas they are sort of consuming only about 65,000 odd. So yes, they are sitting on a good amount of spare capacity. A lot of Tata Group companies are already sort of working with Tesla in a number of areas. So for example, Tata Electronics has already sort of signed a strategic deal for semiconductor chips. Then there are other Tata companies which are working. And so while we still don't have enough clarity that whether such kind of arrangement can work, because the government had said that the import duty will be 15%, provided you do a capex of say $450 odd million. Now, in this case, how things will pan out, we don't know. But yes, things are getting exciting in auto because Tesla obviously is a big brand. Not only that, even the ancillary players like Motherson Sumi or Sona Comstar, Suprajit or Sansera, which is what we track, I think these are the some of the component suppliers to Tesla. So I think going forward, Tesla is definitely going to create headlines, and some of these companies also could also be there in that picture.
Right. And finally, there was also news of Bain Capital getting into Manappuram Finance. So how do we read this?
So I think gold has been making new highs. Now it is said that with Fed expected to sort of cut rates, the gold will go up further. I think it is one of the best asset classes. Now, with that in perspective, gold loan companies are also doing better. So overall sense is that uh, uh, whenever the gold prices go up, it's a good tailwind for them. Then also what it does that it enhances their business growth because loan to value is expected to remain stable. Now you have two major players. One is Muthoot and the other one is Manappuram. Now Manappuram was looking to raise money in the microfinance business, but I think with Bain coming in now, that will be largely shelved. So from that perspective, a company like Bain coming in, I think is a major signal in shift towards ownership and the future direction. And our sense is that while they'll be investing about 4,300 odd crores, and the price what they're going to sort of pay is about 30% premium, this is strategically very positive for a company like Manappuram because Manappuram typically trades at a good discount compared to Muthoot because of the challenges which it faces in the microfinance side. And I think overall sense is that the current promoters will move to a non-executive role, and Bain will have two directors on the board. So I think for a company, next leg of growth with the transformation and further is going to come is expected to be driven by Bain. And Bain is obviously going to strengthen the balance sheet of this company and will make it ready for future growth. So I think overall a good deal, and gold loan companies in general are relatively a lot more better because if the gold prices ticks higher, you have better protection in your book.
Absolutely. Well, that was it for this time. Thank you so much for watching, everyone. And thank you so much, Pankaj sir, for your time and experience.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.